Hello everyone, welcome to my accounting tutorial. Today I would like to show you how to construct a balance sheet and how can we make a balance sheet always balanced. Before we moving on, I would like to share with you some general detail about a balance sheet. In the balance sheet, we have asset side and liability and equity side. In the asset side, we have current asset. This account for cash, account receivable, inventory of the company. And we also have non-current asset. For example, like a company's own plant, property, material, and equipment for manufacturing and producing good. In the liability and equity side, the company have current liabilities, uh, which is a liability with maturity less than 1 year, and non-current liability or long-term debt, which is uh, a company debt uh, with maturity for more than 1 year. It's, it could be more than 1 year, 2 year, or up to 10 year for uh, the company non-current liability. And we have shareholder equity. Uh, the shareholder equity includes common share or equity capital and return earning. To calculate the return earning, we're gonna have revenues, or we also call sale or a turnover, minus for cost of sale or cost of goods sold, minus for other expense and other interest to calculate the company return earning. Always, the company total asset always equal to a total liability and total equity. So let's start. I would like to start from very basic transaction here for new student and for beginner. Just start studying accounting and financial statement. The first one, uh, the company is issuing share for 200 in cash. So the company uh, has the common share for 200 and the cash equal 200. Second, the company is borrowing a 4-year bank loan of 60. The company borrowing a 4-year bank loan for 60. So did that amount with maturity for more than 1 year, we take into account for non-current liability here equal non-current liability equals 60. And the company cash also increased by 60. Number three, the company buying a property for 90. So a property is usually with maturity more than 1 year or up to even 5 or 10 or 20 years. So that's why we take into account the company plant, material, and equipment equal 90. because the company is buying property, so the company cash decreased by the same amount, minus 490. Next, number 4. The company is buying inventory for 60. Inventory, one of the company current asset equal 60. Of course, the cash amount decreased by 62. So now we try to calculate total asset and total equity and liability to see whether the company balance sheet balance. Asset equal to all the item of current asset and total non-current liability. Total equity and liability equal to total non-current liability, current liability, and shareholder equity. Oh, good. The company balance is now still balanced. 2060 for total asset and 2060 for total equity and liability. Next, the company is selling all inventory for 100. The company is selling all inventory for 100. It means that all the company inventory gone by 60, and because the company selling all inventory for 100, and the cash amount will be increased by 100. This means that the company earned a total revenue of 100. However, the company cost of sale is 60, the exactly amount of inventory the company purchased before. Because this is the cost expense, so to be easier, we can put the minus here for a simple calculation. And we calculate the retained earnings equal to revenues minus for cost of sale or cost of goods sold. Then we calculate again the total equity and total liability equal to common share plus for total liability and plus for retained earnings. Exactly the same for total equity and liability, exactly the same with total asset. The company balances is still balanced. Next, the company is paying salary for 25. So the company is paying salary for 25. The cash will be decreased by 5, and we take into account the salary here as the other expense minus 425, and we calculate again for every transaction, for every buying or selling activity, we always take into account the revenues, cost of sale, cost of goods sold, expense, and all other expense to calculate again the retained earnings. We minus 4 revenues minus for cost of sale and minus for other expense. So you can see the total asset now still equal to total equity and liability when we have already calculated return earning again. The final step, the company is paying interest for 5. The cash got will be decreased by 5. And of course, we take into account the interest of 5. And we calculate again the return earning. The return earning once again equal to revenues minus for cost of sale or cost of goods sold minus for other expense and minus for the interest equal. So now the company's balance sheet is now always balanced again here. To stop the video here, I would like to show you again some very basic formula for the company balance sheet. Total asset equal total equity plus 4 liability. Return earning equal for revenue minus for cost of sale or cost of goods sold minus for other expense and minus for interest. And I'm gonna highlight this cell. So that's quite simple to start with a very basic step for constructing a company balances. Hope this help for new student beginners they who just start studying accounting and financial statement. Hope this helps for your studying, and thank you so much for watching this video, and see you next time.